Summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
You know, in the short term, it's the political news. But really, in the longer term, especially into year-end, it's actually the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probability shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut, and really the probability of a Fed cut, you know, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So yeah, 40% by the end of the summer.
I just want to dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's in a day-to-day, it can be noise, because last week you had the biggest down week for the NASDAQ in quite a long time. So I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, you know, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, you know, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation, really, changing at all? Do you expect any surprises on Friday?
I mean, you know, one print can be uncertain, but I think the forces underway for inflation to fall like a rock are in place. I mean, the reality is there's a durables recession. It's in housing, and now it's in autos. That's like 60% of the CPI basket is in a decline until the Fed really injects confidence by cutting. And so I think there is urgency for Fed cuts to happen sooner. But at the same time, I think the effect on inflation is there isn't another incremental driver for new inflation. So inflation, I think, is going to surprise to the downside, and hopefully it's Friday.
Energy, same story. I know we've got gasoline futures lowest in a few weeks, and we broke 80 today on WTI. Brent's below the 200-day.
Yeah, I think energy's a tough trade in the near term, because as long as oil's under pressure, I'm not sure I want to be overweight energy stocks. And if there's drilling under Trump, that's downside pressure to oil. But over the next 3 to 5 years, I think energy is a great investment, but I think this year it's not really going to be the spotlight for us.
So the market is fully priced in September. I guess what I'm wondering is what, as a per cut, and another one this year, likely December, what does the market need to further rally off rate cuts then?
Well, yeah, I mean, it's 96% for September. But I think there's a couple things that can get priced in. As you know, there's some talk of a potential July cut, and I think Friday could actually change those probabilities from a 4%. I don't know. What if it goes to 70, right?
It's not, his style to not telegraph a major policy change. They're in quiet period, and the meeting is next week.
But there is exigent circumstances, because the next meeting is not for 8 weeks. And if inflation has stalled, right, if we have 2 prints of 0 on PCE and its super core is rolling over, I'm not sure anybody would say you need to wait until September. So I think the calculus could change, because there's still a lot of inflation hawks out there. I mean, I hear it from our clients that they think inflation has a second wave, and I think that's going to be dispelled. We're
going to see. Friday's important. No doubt about it. Tom, it's good to have you on set.
Yeah,
as
thanks
always.
for having me.
Good to Tom Lee.
As we had to break, here's our